Hooty hoo, all my stock market gamblers. Welcome today. I'm Tom Mike. I'm so glad you're here. What do we got going on with the markets? Well, we've come down a little bit. And if you're in the market, I'd be really careful because we could start to free fall. We could come down a lot. Kind of like Bitcoin, right? Bitcoin dropped 30% and it did it fairly quickly, right? The stock market could easily come down 30%. We'll see how that plays out. But today I want to talk a little bit about, well, gambling, right? I named the stock market gambler, right? And now gambling, well, Wall Street didn't like the term gambling, so they created the term speculator. But it's really the same thing. Now, a lot of people say, but Mike, a speculator thinks he's going to win. He does research and he thinks he's going to win. Look I know gamblers, and they do a lot of research, especially the sports gamblers. Oh, they know every player. They know every injury. They know the line to get. They do a lot of research. They expect to win, but yet it's still gambling, right? But if you do it in the stock market, you're a speculator. You're reputable. You're not the bum on the street that's gambling, right? Well, speaking of bums on the street, let's talk a little bit about Michael Saylor, right? Okay. Now, in my opinion, he's a gambler. In his opinion, he's a speculator. Well, actually, not even a speculator because he knows that he's guaranteed to win because he can't lose because Bitcoin guaranteed to go up 30% a year, right? So let's talk about this a little bit. Now, he's got a $50 billion investment in Bitcoin, right? I mean, okay, now his average price, $75,000. Now, I'm just using rough numbers, but what's Bitcoin at? Let's call it 90,000. So his average price, $75,000, $50 billion, bought 50 billion, bought at 75,000. We're at 90,000. So what is that? He's up 20% on his $50 billion investment. And he's been in it for about 5 years, right? Now, if he did it in gold, he would be up a lot more. But his thing is the Bitcoin, right? Because Bitcoin can't lose. See, Bitcoin can never, ever go down. And believe me, he's going to lose everything because he's on leverage, right? He's up 20%, but he can't sell. He has no end game. He doesn't have a way to get out. If he sells his $50 billion, you're going to see Bitcoin start to crash, right? And when he gets liquidated, which he will, when Bitcoin drops below 75,000, maybe not this time, maybe they push it back up one more time before it comes down and takes out to 75,000 and he starts to get liquidated and Bitcoin starts to drop below 20,000 as Michael Saylor gets all of his liquidated, as he loses all the money for everybody. And that's okay, right? If you're dumb enough to invest with them, you deserve to lose your money. And that's okay. I don't mind that. But when he goes around to the other corporations and talks them into putting all their free cash flow into Bitcoin to borrow money on their assets, put it into Bitcoin and takes those companies down, well, I got a little problem with that, right? But anyways, MicroStrategies, right? It was up here at 500. Now it dropped down to like 180, right? And it's going to drop below 100. It's actually going to go to zero eventually. But here's the thing. Why is it selling below the actual cost of his $50 billion in Bitcoin? It's selling below that, below NAV, right? Anyways, the net asset value. But he's selling below what the Bitcoin's worth. Well, people don't believe he has the Bitcoin, right? I mean, they just don't believe it. He won't prove it. It's easy to prove because it's on the blockchain, but he won't prove it. So maybe he doesn't have the Bitcoin. Maybe it's a big Ponzi scheme. I don't know anything more than you know, but I know it's selling below the cost of the actual Bitcoin liquidation, which is fascinating to me. We'll see how that plays out, but there's a lot of gambling that goes on in the stock market, right? And it's very fascinating how America has become the gambling headquarters of the world. Now, in 2018, the Supreme Court, well, they overturned a federal ban on gambling. You see, it used to not be allowed to gamble. I know a lot about gambling because, well, Well, actually, when I was in high school, I started being the bookie for my friends because they were really bad at picking football games, basketball games, and I would actually book the bet, and keep the 10%. I knew I was going to make 10%, so I was smart with numbers. I knew that being the bookie was better than being the bettor, and I made a lot of money even back in high school just booking my friends' bets. Now, when I opened up my video store, I had a few video stores in the area. Anyways, I would book bets for my customers. Now, I was young and naive, right? But actually, it made a lot of money because people are really bad at gambling. They think they can win at football, and when the money's on the line, they can't win at football. I had one guy, he lost all the time. Football season came to an end. I go, well, you can bet on basketball. He goes, Mike, what do I know about basketball? Well, obviously nothing, which is better than you know about football. But he was a guaranteed loser, right? I made a lot of money off of him as his bookie. Anyways, that goes back to my younger years in the 20s. But the federal ban on gambling has been overturned, right? So now it's a state-by-state issue, and we've had the proliferation of, FanDuel, right? DraftKings, do you realize the number one app for sports is not ESPN? It's not the NFL, it's DraftKings, right? Because people want to gamble, people want to bet, right? I mean, hundreds and hundreds of millions of dollars are spent just on advertising. I mean, they get these people to go in and they get them to push the DraftKings, push the FanDuel, right? I mean, who is that? Kevin Hart. He must be a big gambler. He loves these sites, right? But a lot of people can't handle gambling. They gamble everything and they lose everything, and then their life is ruined. You see, gambling has the highest suicide rate of any addiction, more than drug addiction. Gambling has the highest suicide rate, period, end of story, right? But in America, we want people to gamble. We want them to be in the stock market gambling. We want this, right? I mean, you got FanDuel is now going to be taking stock bets, which is interesting because Robinhood, the stock app, right, is now going to be taking sports bets. It's just that we want more people to gamble, right? And a lot of the United States, people think they have an edge. And some people do have an edge. Terry Rozier, he had an edge. He was a basketball player, would always fake a foot injury and go out of the game, right? And that way he couldn't score the points, and that way the other team would beat the Vegas line, right? Well, they caught Terry Rozier, and they're going to prosecute him now, but they investigated him a few times, didn't think they had enough evidence. But this last one, I guess they actually caught him counting the money from his winnings. I mean, kind of funny, right? But 1 out of 4 men in America, it's typically men, 75% men, 25% women are sports bettors, right? And 1 out of 4 men in America has a sports app on their phone that they bet with, right? So that's kind of fascinating. There's a new site went up. It's called Cheddar, CHEDDR. I'm not pushing them, believe me, I'm not. Anyways, but they're now the TikTok of sports betting, right? I mean, you can have like play-by-play betting action. You can bet on anything now. I mean, Wall Street bets, what were they known for? The meme stocks, right? The Trump coin, the Melania coin. Now, what's fascinating with these meme coins and a lot of the cryptos is, I started off as a commodity guy, right? I used to trade commodities. I used to teach people how to trade commodities. And commodity trading is what's known as a zero-sum game. Zero-sum game means somebody wins and somebody loses, and they offset each other. But when you get things like meme coins, like the Trump coin, let's just take the Trump coin, for example. Everybody loses except for the Trump family, right? The Trump family made millions and millions of dollars off the Trump coin, off the Melania coin. And they're going to make billions and billions of dollars off the USD1, which is the stable coin run by the Trump brothers, Trump Jr. and Eric, right? So anyways, they're the big winners, right? But everybody else is the big loser. It's worse than a zero-sum game. Now, in the stock market, you can have all boats rising at the same time and people can win, right? And in the stock market, people are gambling more than ever. Now, why is that? Well, like margin debt, right? Margin debt is well over $1 trillion. We hit $1 trillion like a year ago, and we're already at like a trillion four, right? People don't have money, so they're borrowing money to gamble within the stock market. But on the stock market, of course, you're speculating. You're not really gambling, not like sports betting or anything like that. And the other thing that's really taken off is zero-day options. Zero-day options. What is a zero-day option, right? It's an option that expires today, right? They'll put the bet on in the morning, and they got to be out of it by the close because it expires, right? Now, most options, 85% of all options, expire worthless. Isn't that interesting? So 15% expire in the money, and you can make money that way. But zero-day option tradings are one-day options where you put it on today and it ends tomorrow. That has taken off like 5 times, multiplied 5x. That's 500% just year over year. I mean, people want to gamble, right? People want to be in the marketplace. And now what's sad? What's sad is our country. Our country has gone to gambling, right? Okay. Now, what is gambling? Well, I'm looking at it like the Federal Reserve. I'm looking at it like the banking cartel. The derivative markets are gambling, right? Derivative markets are the biggest market there is. This would be the equivalent to what was called bucket shops. Bucket shops were back in the 1920s, right? They were side bets on the stock market. So side bets on the stock market. And these bucket shops were really responsible for much of the Great Depression as the stock market went down. But today we have the derivative market. Now, back in the great financial crisis, the size of the derivative market, which are bets against bets against bets against bets, and the banking cartel, they're all in on the action. They're the gamblers now. And back then, during the financial crisis, it was $60 trillion. I mean, that's crazy, right? $60 trillion. That's bigger than the stock market, right? I mean, that's incredible. It's like the dog wagging the tail or the tail wagging the dog, right? It's bigger than the markets, is the derivative market. While today, we're 10 times bigger than we were in the great financial crisis. We were 60 trillion in derivatives back then. Today, we're over $600 trillion. A lot of people say it's 1 or 2 quadrillion if you really measure it. A lot of them are in dark pools. Dark pools are things that are traded between the banks. You don't actually get to see what's going on, but the banks are out there gambling, and they're gambling with your money, right? You put your money into the bank, they go straight to the casino. Now, the casino being the stock market, the trading floor, and they make their bets in these derivatives on the stock market, derivatives on the futures markets. And I mean, it's just a big gambling spree, right? But that's what we love in America. We're gamblers, but the thing is, at some point, gamblers lose, right? And this whole thing will come crashing down. We got 3 bubbles right now, and these bubbles are going to end. They're not going to end well. Let me just put it that way. We got stock market bubble. We got the real estate bubble. We got the credit bubble. All these bubbles are going to pop at the same time. And when they pop, these $600 trillion in derivatives, they're going to bring the whole financial system down to its knees. And this is why Tall Mike keeps telling you, you got to get something in your hands. I mean, a lot of people think they own gold because they own the GLD. The GLD is not gold. You're never going to see that when the system crashes. You got to hold the gold in your hands. A lot of people think silver is the SLV. No. Silver is not the SLV. SLV is paper, right? GLD is paper. They can make as much paper as they want, but they can't print gold. You can't print silver. You got to get some real money in your hands. That's just what you got to do. Now, that's what Tall Mike's doing. You got to do. I know a lot of you want to be in that crypto fugazi stuff, and you can watch it go down. You can watch it crash. I mean, a lot of people are afraid that are in there. They got millions and millions of dollars, and they just lost 30% of the money. Like in 2 weeks, they're going to probably lose another 30% really soon. Maybe we get a little bounce from it. I think we'll get a little bounce from here. But look, this thing is it's a house of cards waiting to come down, and it's based upon gambling, based upon the derivative markets, based upon Michael Saylor could bring the whole NASDAQ down when he has to liquidate his $50 billion Bitcoin portfolio that he made 20%. Nothing wrong making 20%. I'm just saying if he was in gold, he could have made over 100%. 100%. But he didn't like gold, right? Because gold's real. He likes this fugazi. I don't like fugazi. I don't like paper stuff. I want the real stuff in my hands. But that's because I'm Tall Mike. If you like this stuff, give me the thumbs up and punch that subscribe button. But get out there. Enjoy the day, everybody. We'll talk again real soon. Bye-bye now.